Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Shanghai Junshi Biosciences Co. Limited annual report. Shanghai Junshi Biosciences Co. Limited is a biopharmaceutical company that specializes in the discovery, development, and commercialization of various drugs. The company focuses on several key therapeutic areas, including malignant tumors, neurological diseases, autoimmune diseases, chronic metabolic diseases, nervous system disorders, and infectious diseases. The company's expertise spans across multiple business segments, which include malignant tumor treatment, neurological disease management, autoimmune disease therapy, chronic metabolic disease care, nervous system disorder treatment, infectious disease prevention and treatment. By concentrating on these areas, Shanghai Junshi Biosciences Co. Limited aims to provide innovative solutions for patients suffering from various diseases in the People's Republic of China. The significant increase in Junshi Biosciences' stock price over the past year can be attributed to a series of positive news events. The company's strong sales performance of its key drug, toripalimab, was a major contributor to this rise. In 2024, revenue increased by approximately 30% compared to 2023, with domestic sales of toripalimab rising by about 66%. This improvement in financial performance and product sales likely fueled investor confidence. Regulatory approvals also played a crucial role in the stock price increase. Toripalimab received marketing approvals in India, Jordan, and the EU for specific indications, marking its continued international expansion. The inclusion of 4 new indications for toripalimab in China's national drug list further increased the drug's accessibility and sales within China. The company's advancements in its drug pipeline also contributed to the stock price increase. Positive clinical trial results were announced for JS001SC, a key product, and the new drug application, NDA, for Rocankibart was accepted. Additionally, toripalimab received marketing approvals in several countries, including the UAE and Kuwait. The company's strategic fundraising efforts also supported its growth initiatives. In June 2025, Junshi Biosciences successfully completed a placing of new H shares, raising approximately $1,026 million, which was earmarked for innovative drug development and general corporate purposes. Overall, these cumulative positive developments across regulatory, commercial, and financial fronts led to the substantial increase in Junshi Biosciences' stock price over the past year. Shanghai Junshi Biosciences Co. Limited maintains a market capitalization of $28 billion, broadly in line with the industry peer group. Shanghai Junshi Biosciences Co. Limited trades at a higher price-to-book ratio of 2.91 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 45% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The company's net income experienced a significant decline of RMB 370 million between 2024 and 2025. This downturn can be attributed to substantial investments in research and development, as well as increased marketing expenses. As a result, the company's operating profit margin improved from -68.7% in 2024 to -40% in 2025, indicating a reduction in losses. Similarly, the net profit margin also showed an improvement, rising from -70.6% in 2024 to -64.2% in 2025. However, these gains may be short-lived due to potential revenue decline caused by reduced sales growth resulting from inclusion in the National Reimbursement Drug List, NRDL. The company's financial performance indicates a significant issue with its ability to generate positive operating cash flow. The data provided on page 30 and page 55 of the report reveals a substantial negative operating cash outflow of RMB 515 million and a net cash outflow from operating activities of 519,567,732.32 yuan respectively. This trend suggests that the company is struggling to manage its expenses and generate sufficient revenue to cover its operational costs. As a result, it is depleting its available funds, which can have severe consequences for the business's long-term sustainability. The negative operating cash flow indicates that the company needs to reassess its financial strategies and explore ways to improve its profitability and reduce its expenses in order to achieve positive cash flow. The company's debt level has undergone significant changes over the past year. According to the extracted summaries, total debt increased by a substantial 52.7% from RMB 2,556,118,264.57 in 2024 to an even higher amount in 2025. This increase is evident across various categories, including bank borrowings and lease liabilities, which rose by 52.3%. Furthermore, non-current liabilities saw a notable surge of 121%, indicating a substantial shift in the company's financial obligations. In contrast, interest expenses have shown mixed results. Initially, they increased from RMB 43,941,768.23 in 2024 to RMB 64,317,116.52 in 2025, suggesting that the higher debt level has led to increased borrowing costs. However, a later summary reveals a slight decrease of -0.3% in interest expenses, which may indicate some cost-saving measures or changes in financial management. Overall, while there is evidence of increased debt and corresponding interest expenses, the latter's trend appears more nuanced, with a minor reversal in the latest data point. Management is emphasizing the importance of building a strong compliance culture and optimizing its systems. This includes pursuing innovative strategies in drug research and development, expanding market channels, and strengthening cost control. Key areas of focus include innovation-driven growth, academic promotion, and full process guidance and supervision. The company aims to enhance operational quality through improved efficiency and resource allocation, driving high-quality business development. A promising anti-tumor treatment strategy is being pursued with the combination of tifsimalimab and toripalimab. Additionally, the company is rapidly expanding its innovative drug R&D pipelines, enhancing R&D efficiency and core competitiveness. Management is committed to maintaining a corresponding scale of investment in R&D for preclinical research, global clinical trials, and preparation for NDAs. This includes strengthening forward-looking strategic research to determine the direction of new drug R&D according to clinical needs. The company's financial activities have been notable for two key initiatives. Firstly, the company has demonstrated a commitment to returning value to its shareholders through dividend payments. In recent years, this has taken the form of significant payouts, with 94,328,861.04 paid out in 2025, and yen 73,790,126.93 distributed in 2024. In addition to dividend payments, the company has also engaged in share buybacks as a means of utilizing excess capital. Specifically, in 2024, the company purchased 136,844 ordinary shares, further reducing its outstanding share count and potentially enhancing shareholder value through increased ownership stakes. Concerns about inventory buildup and supply chain disruption are valid in today's fast-paced business environment. One major concern is that suppliers may struggle to keep up with the rapid development of companies, leading to potential disruptions in the supply chain. Another significant risk is the disruption of research and development R&D technical services or raw materials supply, which could severely impact business operations. Furthermore, many raw materials are imported from other countries, making them susceptible to changes in international trade policies and regulations. Market conditions, competition, pricing, and selling expenses also pose a threat to inventory management, as companies may be forced to write down the value of their inventory due to market fluctuations. These risks highlight the importance of careful planning and contingency measures to mitigate potential disruptions and ensure smooth business operations. That concludes the financial summary for Shanghai Junshi Biosciences Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.